Okay, we are live. It is just before 7 o'clock on Tuesday, and I think that this time is going to work. Usually prepare for my Facebook lives on Monday, the day before, and then we'll shoot it on Tuesday. It's interesting this week, or actually, I should say last week. I was out touring and meeting with a bunch of commercial brokers, lawyers. And mortgage guys. And it's amazing how when you put kind of a concerted effort into finding properties that all of a sudden I've got kind of 12 deals in my pipeline right now. We rank them kind of, which one we would like to do the most through worst. Some deals, they just don't make any sense. But it kind of ties into having just an incredible team around you and how vital that is to your success investing in commercial real estate. Because for me, prior to having those conversations, I was wondering where my next deal was going to come from. So my partner and I, we basically sat down, we made some phone calls, and like I said, within 3 days and all those meetings and then 2 days of touring were full, if you will, and super excited. So that's what I'm going to get into today, which is kind of the topic, which is kind of the 7 people that I think you need to have on your commercial real estate investing team. But I guess what I'll do just before I get into that is just make sure this is the first time you're on a Facebook Live. My name is Shane Melanson. And the reason I've kind of created this and a little bit about who I am is I focus on helping professionals invest in commercial real estate. And I do that by focusing on inefficient markets. And when I say an inefficient market, what I mean by that is you don't have all the information. There's imperfect information. And in commercial real estate, that gives investors with that information an unfair advantage. So case in point, 3 of the deals, I'm the first person to ever see those deals. They have not even hit the market yet, and which is why I've got to act fast. So basically, right after this Facebook Live, I've got 2 meetings, potentially 3, one with our bank, and we are going to go through what we can do on the property, the zoning, a meeting with one of the tenants. When you get these opportunities, you have to act extremely fast because I know that my window is very small in order to take advantage of this opportunity. If the deal pans out, I'm happy to share it with you. But when I'm in a deal, one of the things that I make a point of is I don't talk about it. So I'm certainly not going to talk about it on Facebook. I don't talk about it to anybody outside of like my core group till I have control on that deal. Once I have control, meaning it's under contract, even at that point, I generally don't talk about it with too many people. But once the deal is closed or unconditional, I'm happy to share all the information. I'll tell you about the good, the bad, the things that I learned. But up until that point, it's very important to kind of keep that confidential. So you may want to consider that. That wasn't even something I wanted to talk about. But when someone shows you an opportunity, generally, especially if it's an off-market opportunity where a broker may not even have control on that deal. Now, in this case, these brokers do have control, so I'm not worried about that. But sometimes what happens is a commercial real estate broker, is selling a deal and they find out about it, but they don't actually have control, meaning they don't have a listing on it. And if they show it to you and then you start talking about it to 10 other people, what happens is another commercial broker hears that and says, oh, okay, well, actually, I can't show you because you've already seen it, but I could show my 5 other guys over here because that's how they get paid. So just really thinking through when you're in a market where it's inefficient and you're looking for those kind of unfair advantages, just kind of take that into consideration in terms of who you're going to share that information with and how you're going to use that, because that's how you can make literally millions of dollars in commercial real estate investing. So that's a little bit longer than I wanted to for my introduction, but I think that that's pretty important. Before I forget, I just wrote a new report called My 8 Non-Negotiables. It's actually, which way do I have to lean? Ooh, gotta go this way, right? You can go to investwithshane.com. I'll put a link in the show notes, or someone else can put that in there. And you can go and download that report. Just put your name and email. Quick disclaimer. This is not meant to be legal or tax advice. This is just my thoughts and experiences on investing. Please consult with a lawyer or accountant when investing or before investing. Everything I'm sharing is not meant to be legal or tax advice, just sharing my own situations and how I invest in real estate. So you can take it and, kind of learn, but it's not meant to be legal advice. So, okay, that's taken care of. Now let's get into really the meat of today's, the core of the training on the topic, which is the 7 people that I think that you need whenever you're investing in commercial real estate. So I've got my notes over here, and I thought it would be, okay, I'm going to start with the big picture. So the people that you're going to need, because commercial real estate is like a team sport, the better your team is, the quicker you're going to be able to react to deals, the faster you're going to be able to execute on deals. And in commercial real estate, there's a phrase that people say, which is time kills all deals, which means the longer you stretch a deal out, the more likely that deal is to fall apart. So you want like an incredible team, a lawyer, an accountant. We're going to get into all of them, but you want to make sure that your role is the quarterback. You're telling, or the coach, you're telling all these service providers what to do. And what I see with new investors, unfortunately, is the service providers are telling the investor what to do. And if you think about it, that's backwards, because you're the person paying all these guys. They're only making money because of you. You're taking the risk. Now, if you don't understand the rules of the game, then it's going to be difficult for you to say, no, actually, I want you to do this. That's, or wait a minute, why are you doing that? So a few things. I'm never afraid to ask questions. I have no ego because I'm not the expert in this. I think there was a seed in there. I squeezed some lemon in my water. Anyways, so those are just kind of a few things to kind of keep in mind when you're hiring a team. I'll share with you my first real estate investment, because it'll kind of show how like where people start and where you end up over time. Like it's a constant journey. And so I don't want you to think that because you've never invested in real estate or commercial real estate that you have all the answers, or that this is, it's a progression. And so I remember the first time that I bought an investment property. It was actually a single family house. It was I think it was on 30th Avenue in the northwest of Calgary in Mount Pleasant. And my friend, who also worked in the bar, was a realtor. And so he said, hey, you want to, do you want to invest in real estate? And because he knew I was getting into it. And so essentially he showed me 2 houses, one of which I ended up buying. He did very little in the way of, and I'm going to back up. Nothing he did was wrong. It's just that he wasn't the right guy to be working and helping me, because he didn't understand investing in real estate. He knew how to help someone buy a house, but that's way different than investing in real estate and understanding like the financials and economics of a deal and making sure that you're going to make money and what's your exit. Excuse me. None of those kind of conversations took place. I can't blame him. That was my own fault. However, what I'm saying is when you have the right team versus the wrong team, deals can go really good or really shitty. And so in my case, this deal, I was fortunate, which we'll get to, but it could have been a lot worse. So when we went out and started looking at houses, we ended up making an offer on a house that had been on the market for 1 day. And he didn't even want to submit my offer of $180,000 on a $200,000 house. And hey, Kyle. And so that could have been my first mistake, listening to his advice. But fortunately, he submitted for 180. They accepted that offer without any counter. So immediately I thought to myself, like, I overpaid for this house. No negotiation whatsoever. I should have got it for less. So mistake number one. Mistake number two, the property inspector that my realtor suggested, he was brutal. I don't even recall what he did, or if he explained to me, for example, and this is how naive I was when I first started. I was 23 or 24 when I bought that house. And I mean, looking around, I see my brother who's 27 today, and like now he obviously sells real estate. But if I would have known what he knows when I was his age, man, I'd be so much further ahead. But hindsight is it really doesn't matter. So in this case, the house didn't have central heat. It was baseboard heaters and a fireplace, and so that all of a sudden became more difficult to get insurance, and the copper wires that were in it. And so all these issues that came up that could have been brought to my attention by either the realtor or the home inspector were not. Worse than that, though, was the mortgage broker that I had. And I'm not going to get into the details, but the gentleman that I was dealing with, who was a referral, and see, this is what happens when you have one wrong guy in your team and he starts to refer all the different service providers that he works with. It's kind of like, I don't know what I think there's a phrase, but essentially it's kind of like, the company that you keep. So if you're not good and then everybody else sucks, then they're pushing all those people into your world. And you can just imagine that everything starts to fall apart. Well, in this case, the mortgage broker, I'd heard many different stories, but halfway through my deal, he went missing. Now, this was like the nicest guy in the world. Every time I called him, he was just like, "Shane, how's it going?" And he was just like the most charismatic, and I felt like I was like a king. Well, whenever I pressed him for, "What do you need?" "No, don't worry about it, Shane. It's taken care of. I got it. It's this, it's that," and everything was easy and simple. And it was my first real estate investment, and I bought a house, and I had actually used him. So I had a bit of faith and trust that he was going to be able to come through. That was incorrect. I don't know exactly what happened, but like I said, like he is like MIA, and that was 15 years ago. A gentleman in his office, when I called in, and I was quite frantic because my money was going up. Actually, I'd already removed conditions, so my money was hard, meaning the $20,000 deposit I had on this house, if I didn't close, I would lose it. And so for anybody, that's a lot of money, but especially for someone like that was everything I owned. That was everything I had at the time. Long story short, a gentleman by the name of George at his office picked up the file and was a stud. Like he's like, "We need to get this done in 2 weeks. Here's what you need to do." Boom, boom, boom. We met, we figured it out. And at the end of the day, I was able to close. I made a little bit of money, not a ton, but I doubled my investment roughly in about 8 weeks. But I learned a ton on that deal. Now, I probably would have learned a lot more had I lost money. But I still kind of took away from that a lot of different learning experiences. And so what I'm going to talk about today is just the importance of having those A players on your team, because A players I view as an investment, not as an expense. If you've got the wrong guy in your team and you're spending a lot of money, that to me is a cost, both in time, in energy. You'd be shocked at the number of service providers that can cause stress. And all of a sudden, it's like you feel like you're on an island and you're negotiating the deal against everybody. You think your broker's on your side, but you realize that he's working for himself because he just wants to make money. Your lawyer's trying to get involved in the deal and negotiate it. The architect is arguing with you on your design, and it's just, and the reason I'm saying this is because this has happened to me, and I'm trying to help and make sure that before you commit to anybody in terms of who your service providers are going to be, that you look out for the red flags and that you don't hire people based solely on price, because it's a very easy way to attract very low quality service providers. I'm not saying you got to pay the most money, but I'm just suggesting that it's important to make sure you find A players. Okay, so the 7 key people, I'm going to list them first, and then I'm going to go into kind of high level kind of concepts and ways to think about how to hire them, and then also understanding where each of these people come from. Some people only get paid on contingency. That's important to know. Other people get paid retainers, meaning they get paid up front and then they get a bonus at the end. Other people are paid hourly. So understanding how everybody fits in will give you a much clearer understanding of kind of the landscape and the and basically how everybody fits together. Okay, so number 1, in my opinion, and I don't think I'm biased, because I was also I've been 2 of these roles in my past life. Commercial real estate agent or broker. Number 2, mortgage broker. So those are the first 2. Those actually, I was both in, I did mortgages, and I also sold real estate, both residential and commercial. Number 3 is your real estate lawyer. Number 4 is your accountant who understands commercial real estate. Number 5 is a general contractor. Number 6 is an architect, and number 7 is your insurance agent. Now, there's other people that are going to be involved in the deal. However, they are kind of like, they only come into the deal once or twice, like a civil engineer, a geotech, your title or escrow officer. Generally speaking, because I only deal in commercial in the US, your title or escrow is generally picked by your lawyer or the other side's lawyer. So you really don't have to think too much about that. Okay, let's get into the commercial real estate broker. So if at a fundamental level, a commercial real estate broker is like the middleman who tries to bring both sides of the deal together. Okay, and what's different in commercial real estate typically than, say, residential real estate is that a commercial broker is usually acting on both sides of the deal. They're representing the seller and the buyer, and that generally isn't too bad as long as both sides of the deal are sophisticated. Okay, if each person has 10 or 15 years experience buying and selling real estate, commercial real estate, having a broker as the intermediary and basically they are just making sure that everything stays on track, and they're driving the deal. That is what they do. They drive it. They're pushing on both sides to make the deal happen, because commercial deals blow up all the time. So that's important to understand. So when you get an unsophisticated buyer and a sophisticated buyer that come into the deal together, and you have one agent that's representing both, and they're driving and pushing a deal, either it blows up because the unsophisticated guy gets scared, or the unsophisticated guy is pushed into a deal that he never should have got into. And that's kind of one of the reasons that I'm consulting and helping professionals right now, in full transparency, is because there's a lot of unsophisticated. And when I say unsophisticated, it's just they don't have experience. If you don't have 10 or 15 years experience and you haven't bought hundreds of millions of dollars or billions of dollars of commercial real estate, and you're going up against a guy who's like Tiger Woods, and you are used to going to the driving range, I mean, it's pretty difficult to compete against someone like that. And in commercial real estate, that's what it is. You're really competing against guys that have all this experience. They understand law, they understand contracts, they understand negotiations. And when you have a broker that is just there to ram the deal in, because that's the only way he gets paid. He only gets paid if a deal comes to fruition, meaning it closes. And so most times, if you're not even in the game of commercial real estate, as brokers are looking for deal certainty and maintaining their reputation. They also want, the highest price, but deal certainty is probably paramount, because if they spend 3 months, 6 months, I was just involved. I came into a deal where the seller was very frustrated because someone had tied up the property for 6 months, drug it out, screwed around, and then dropped the deal. And the seller was very upset because they needed to sell. I came in, and within 24 hours, I had written an LOI. Sorry, guys, but I don't want to waste your time. Instead of dragging this thing out for 6 months where a broker, an investor, and all these service providers are doing all this work, it's just a poor way to conduct yourself, and it really doesn't help you when you're trying to close deals. Okay. Explains what a commercial broker does. That's a little bit more than I had anticipated on saying, but it is pretty important. Okay. Next is your mortgage broker. And your mortgage broker is the guy that's going to help you find debt. And your debt is going to be anywhere from 60 to 75% of the deal. Right now, in most markets, you're probably about, I'm going to say 2/3 debt, 1/3 equity. That's kind of a good rule of thumb to think about. And the reason that I use a commercial broker, even though I lent kind of $200 to $300 million a year when I was at Sun Life, is because markets change. If you are not talking to lenders every single day, you don't know what's available out there. And I'll give you a kind of a high level in terms so you understand the commercial lending world. Banks generally have a budget. Banks, pension funds, whoever lender that you're talking to, they generally have kind of a target. They're going to lend out let's just say $500 million a year. Well, if they lend out $400 million in the first quarter, then they're probably going to save that last $100 million for like trophy deals. Whereas other guys, let's say you're into November and they still need to place $150 million of their budget because they haven't lent money, they might get more aggressive and give you better rates or better terms. And typically speaking, you're going to start with kind of an engagement letter with the mortgage broker. They'll likely give you, they'll want a retainer because they're going to do a lot of work, but they will save you far more than what you'll pay for a good mortgage broker. All right. If you get a crappy mortgage broker, it's like anything, right? But if these guys are plugged in, they have the relationships, they understand how to pitch a deal to the lenders and can kind of get a bit of a bidding war for you, that can be extremely helpful. So mortgage broker, commercial real estate broker, I think those are critical for your team. Number 3 is your real estate lawyer. And I said real estate lawyer because having a lawyer that maybe does wills or divorces or corporate, it's way different when you're starting to deal with commercial real estate. And I would even go so far as to say that when I hire real estate lawyers now, I want them to have like specific experience in the place that I'm investing, in the type of deal that I'm doing. So if it's, when I did my industrial condos, for example, that was a lot different than just doing a simple acquisition of an apartment building or a retail property, right? I was buying something, I had to strata the units. I then had to sell all those units off. And so there's a lot of moving parts. And if you don't have experience through that kind of whole phase from A to Z, then I don't want a lawyer learning at my expense. I guess maybe that's the easiest way to put it. One thing I would say, I'm just going to get a drink here. One thing I would say or caution, a few things on real estate lawyers, things to think about. Number 1, and this is hard to know up front, so you might have to ask around, but one thing I like to stay away from is lawyers that are deal killers. You can talk yourself out of any deal, and some lawyers will try to find and pick apart and try to scare investors out of everything, and you don't need that, right? You want to find investor or real estate lawyers that are there to facilitate the deal, okay? So that's kind of number 1. Number 2, I don't like real estate lawyers that try to wedge themselves into the deal and they all of a sudden take over the negotiation. To me, that's not their job. Their job is to do some negotiations, and I want them picking up the phone and calling the other lawyer if there's an issue. I don't want them sending friggin' 10-page emails that take 6 hours and cost me $1,000 or $1,500 for them to draft. Okay, I want them to be on my side, protecting me, but we got a common vision that if the deal makes sense, then I don't want to get tripped up over small issues. And so having a really good real estate lawyer is so critical. I'll tell you a bit of a story later on where I actually advised a client to use a lawyer that I had not used, and it didn't work out. I mean, in the grand scheme of things, it worked out, but we learned a lot of lessons, and I felt horrible because I referred someone that I shouldn't have done. So one thing you could do is Google the lawyer's name to find out if they've got any malpractice or complaints on when like bar complaints, I guess they're called, and it will kind of tell you the ethics of that lawyer. So that's just something to consider. Your accountant. This is someone that I'm actually involving a lot earlier in my real estate deals because I want to make sure that I'm getting the best tax advice and I'm structuring my deals in my corporations with my partners the right way. So I'm not going to get into too much detail on this because it's a really big topic and I'm actually really drilling into it right now. But I can tell you that if you understand how to cost segregate, depreciate, amortize, how to structure your offers with the right, I'll give you just one quick example. So if I make an offer in one company and then I have to assign it to another company, which is quite typical in commercial real estate, how the paperwork flows and where the money is coming from for deposits, and when that money comes in, and was it a shareholder's loan? Like, if you don't track all of that, your accountant's going to be either A, charging you a ton of money to figure it out, or B, you're not going to get credit for it. So you just want to think about how you're paying for your due diligence. If you're setting up a new corp, you want to just have the bank account set up properly, and it's much easier to engage an accountant up front. Especially if you're raising money, because that's the other thing is the accountant and your lawyer kind of need to have conversations and be talking and communicating to make sure that what you believe you're telling your investors is in fact written correctly in your subscription agreements and your limited partnership agreements. So enough on that. Next is the general contractor. I'm not going to even talk about development because I'm going to assume that most people that are starting out in real estate investing are probably not going into development. That's something that happens much later in the kind of progression of investing. But let's just say you're buying a property that is value add, which is generally what I suggest professionals start with because you're able to really increase the value. And that's one of the strategies, which is increase the value, refinance, pull your equity out, go into the next property. So in saying that, your general contractor is vital to figuring out how much it's going to cost, how long it's going to take, is there any issues? And this kind of ties into the architect. So I'm just going to do both of these guys together. They are separate. And generally, I would start with the architect and then get recommendations to a general contractor, but not always. So my general contractor, I'm going to look at a lot of the big items, right? I want to know what are my CapEx, capital expenditures, so roof, mechanical, electrical, structural. I'm going to look at my tenant improvements, which is carpet, paint, moving things around. Do I need to change the exterior of the building? That might require or trigger a development permit. How long is that going to take? Do I need to change the use? Now all of a sudden I'm talking to my architect. So you want to make sure that your architect, your contractor are working on the same page and they get along, and that they are that they've got that experience. And specifically with the general contractor, you want them to have relationships in the city that you're dealing in so that they've got good coverage from their trades. Not generally, in every case I've ever hired a GC, I always get a guaranteed maximum price or some sort of a upset price. I don't believe, frankly, in doing cost plus, because you could do a cost plus with a guaranteed maximum price, meaning you could go cost plus up to an upset price and it doesn't go above that. That would be one way to potentially limit your risk on the downside. The other thing that to keep in mind is the games that get played in construction are change orders, meaning your architect provides drawings, your general contractor says, yes, we will build that based on the drawings. And then they start getting into it and the general contractor comes back and says, well, you know what? Actually, we can't do it that way because of X, Y, and Z. That triggers a change order. It starts small, and over the life of a deal, it's incredible how much those change orders can throw you off. And so every week, every 2 weeks for sure, I prefer to have site meetings and making sure that we are on budget. Anything unexpected, let's look at the drawings. And I always push back on the general contractor and say, you're looking at these drawings today. If you see something that you don't agree with, then I need you to tell me up front, because I don't want to have surprises down the road. I've got a budget, and I got to stay on that budget. Okay, so those are general contractor and architect. I don't think that there is anything. Yeah, I had a story on just an architect that okay, I'll tell a story really quick. An architect here in Calgary went out and hired a general contractor to build a building for a golf course. It was actually, yeah, I'm not going to say any more than that. My understanding is that the general contractor was experienced in building homes, not in doing the type of construction that was required here. Suffice to say, lawsuits, likely going into foreclosure. It's just a very messy situation when you have an architect that is controlling the whole situation and really, in my opinion, is not maybe finding the right general contractor. So I can't get into too many details on that. If you're here, you probably know what I'm talking about. But at the end of the day, I've seen it, not just on this, I've seen it in many different instances. I'll add one person into this, which is your QCS, which is your quantity cost surveyor. And they are the person that is represented by the bank that goes out and verifies the type of work that's being done on the building. So having someone that's good will also protect you as the principal or investor in the deal. So just kind of keep that in mind, QCS. Last, your insurance agent. I mean, at the end of the day, you really just want to make sure that you're talking to an insurance agent probably several weeks in advance of closing. I've made the mistake of waiting till like 2 days before closing and scrambling around trying to find the right insurance policy. It just adds more stress to your deal. It's unnecessary. And really your insurance is going to be dictated in large part from the bank, because the bank has, you know, the majority of the money that that's being lent on the deal. I think I've already talked about most of this. I'll give you a couple of action steps in terms of how to build your team and just some kind of things to think about. Number one is building a team takes time, and the teams that I've built have really progressed, right? So as I do bigger deals, as I establish myself and my reputation of closing and paying guys on time, then investors, or service providers want to do business with me. They actually seek me out, right? So I'm attracting now like incredible service providers, which is a really nice thing. But when you're starting, you don't have that track record. And so a service provider is going to be assessing you in terms of, are you going to close? Do you have the financial wherewithal? Are you credible? So you want to give those service providers that level of comfort that you have the ability to close the deal, that you're in it for the long term, that you're not just doing one deal, that this is going to be something that you kind of grow over time. And I think that would serve you well. One other strategy, or just something that I kind of think about and I've kind of noticed, is especially in the beginning stages of a service provider, I don't like them to pick up the tab because I never want to feel an obligation to use them down the road. It's something small, but you'd be surprised at the number of kind of new investors that I see that get into this that think, oh, well, that lawyer's making a bunch of money, or this accountant, or this broker, or whoever it is. Yeah, of course, they want to pick up the tab. That's fine. The challenge with that is, for me, I like to maintain a bit of a distance. Even though I can be friends with them, it's still a professional relationship. And if they've done too many nice things for me, then it just makes it much more difficult if I have to come down on them, or if there's an uncomfortable conversation that needs to take place, I got to fire them, whatever it is. When someone's kind of like done all these kind of generous things for you, it's much more difficult to be a hard ass when you need to. So that's a bit of a tangent, but I think if you just kind of keep that in the back of your mind, it might be helpful. Yeah, I was going to tell about this one story. I'll get into it really quick. I'd mentioned it earlier, and it was a mistake that I had made, which was essentially we were closing on a retail property, and the lawyer that I generally worked with was away. And so I wanted to give my client two options. The one option came in at an extremely low price, which probably should have raised some red flags. But this gentleman came highly recommended, and I kind of called around and vetted him, and I'd heard very good things. Well, long story short, this lawyer was, in my opinion, over his head, and it ended up being a very stressful situation for my client and for myself. And so I learned a lot in that particular deal, where if I've never done business with them, I will not recommend anybody. And number two, how do I put it? When you're referring someone, in my experience, there's almost always more downside than upside, because the expectation is that person's going to do an incredible job. And if they fall short of that, then it reflects poorly on you, me. So just kind of keep that in mind. If you are getting a recommendation from someone, I would ask, have you worked with them? Yes or no. But at the end of the day, you really do need to make that kind of call, because you're going to be the one dealing with them. So you want to have very clear expectations of how that relationship is going to look, and how you're going to exit or divorce if the deal goes or the service provider is not really living up to the way that you want them to. Okay, that's it. A little bit longer than for today, but I kind of expected that going through these 7 different service providers that it might take a little longer. As I'd mentioned, I've written a report called the 8 non-negotiables to investing in commercial real estate. I think that this would be very helpful in terms of giving you kind of the principles that I use, and whenever I'm going into a real estate transaction. So if you'd like a copy of it, you can go to investwithshane.com. You just enter your name and email, and you can download it there. So that's it for today. Any questions, by all means, you can put them into the comments, and I will be happy to answer them, whether it's live or later. So thanks everyone for watching. Crystal and Kyle, Paula, and everyone else that I may have missed. So that's it for now. We'll talk soon. Bye for now.